for that. The reason why the selling was expected to come in below 38.90s was because of hedging, because of option strikes at 38.90s. We would obviously start to expect to see that hedge selling, accelerating sterling to the downside. Now that hedge selling after 3 o'clock starts to come out. So at 3 o'clock, we can obviously start watching for any opportunities, because obviously these guys at 3 o'clock, they're no longer needing to have that hedge in place. So when I see the price making a move lower, that becomes a possible buy side reversal based on the unwind of the short hedge that took place from 38.90s. So this is something that you can start watching for. This is something you start realizing and appreciating when you're watching these types of trades. Well, that's quite sensational, isn't it? The buy that's on cable coming off that bottom print, the 20 evens on the euro, the bottom edge finally being achieved on the oil, the bracket obviously heading into that top edge in the dollar index, the sell that we talked about coming into the pullback price on the S&P. Every single thing we've mentioned has actually happened, hasn't it? Every single thing, every part of that jigsaw puzzle that we've talked about has actually ended up happening. So great news. It means that obviously you can lean against these types of trade ideas. You can start building out your own thoughts, and it starts to show that you can make some seriously big cash when you see these things happening in real time. And this storyline on oil isn't hidden from you guys. I mean, if I look at a 5-minute chart, you'll see you might be sitting saying, yeah, but is it that visible on a is oil that visible? Well, let me show you what it really looked like, guys. You tell me, seriously, you tell me if oil's visible for that sell-off that we had this afternoon. I was selling it at lower prints this morning. So that sell we had this afternoon is obviously not just visible, it's crazy. Because we shouldn't have that amount of value on the calendar spread. That's not even fair. But because of that, obviously we got to squirt through to the top edge here. Obviously we got a measured move bracket against the bracket levels that we were obviously working against earlier. So we already had an idea of where the high price was for a guaranteed premium, right? So we can obviously look at that bracket and say, okay, well, the buyers that are involved at the bottom edges and this pullback trade, the halfback trade, we know that they're going to start looking at this trade and they are probably going to exit the trade at this price here. Surprisingly enough, yet again, as always, simple structures give me the perfect trade at the top edge. Simple structures give me the idea about where to start working into that short trade. I started to work into the short trade. I sold into the Aries, as you know, sold into the 75s, 80 area, 85s, and now we've just traded a low print price of 85 for a full $1,000. And there's nothing about that trade we haven't taught. The idea of guaranteed premiums, the idea of value, the idea of the failed auction at the bottom edge, the short-term value pressure coming back in, the idea that sometimes we've just got to be cautious, because why, you might be saying, why did you wait so long? Why were you not selling the top edge? Because the dollar was getting murdered at that stage. The dollar was getting absolutely murdered at that stage. So when the dollar holds on to those gains, I'd stop selling oil. I want to let oil now go through at that stage to see how far we can take it. Now, I know there's no demand for oil, so as soon as I start to recognize some weakness coming back in against the euro, if I look into the euro, take a look at where the weakness came in. The weakness came in 15, 20 minutes before the top edge of the oil traded. Not after the oil traded, 15 to 20 minutes before the oil started to sell, the euro dollar was already coming off. The dollar buyers had already shown up on the Dixie. We'd already talked about it. We'd already tweeted it. So we've already started to then work into that sell trade. It's obviously made its full measure to the downside. And just, I can't say much more than that. It's just crazy good, isn't it? So when we look at the shape of this, we can say, right, well, there's the bracket high, there's the bracket low. So that takes you to what target price? Well, the target price, of course, becomes this area here. What the hell is that I've just drawn? What's the Fibonacci? Fibonacci. So the target price was obviously just coming back into that same zone area, which is about the 85 area, right? And it's just the same bottom edge as we left from. The same bottom edge, guys, that we left from. But this chart doesn't do this trade justice, does it? This chart is nowhere near doing this trade justice, because the trade really shows on this chart, doesn't it? That's where the trade really starts to show up. The supply that wasn't, the demand that wasn't there, the demand for the euro dollar that was pouring in, which kept us nice and safe away from selling into it. And obviously we watched for the reversal of the euro dollar, sold the oil, $1,000 trade. And look at what's happened since then, guys. Buy side profit taking, starting to pop the price on oil, just exactly as we talked about earlier. And that's absolutely special, isn't it? Absolutely special. Beautiful, lovely, delightful. It is all of those things in one trade. Crazy, crazy good. And it is crazy good, by the way. Classroom in half an hour. It's been a pretty hectic day today, guys. So yeah, pretty hectic day for you guys to make some nice cash on. But my goodness, the swings that we've had have been fantastic, haven't they? Very, very clean, nice, easy swings. Pretty fast and furious at times, but yeah, that's what we like to see. That's what we like to see.